Hello fellow traders, this is Paul Lemel. It's going to be a short video tonight. We don't actually have a stock that we want to recommend. Actually, the last several weeks of posting stocks, just really not been much follow through on them because of the big downtrend in the market. Even if we have a good chart, we've had some excellent charts. In a normal market, they'd be fine, they'd be going up, but the market is dragging them down. I'll show you the market rating here in a second, but I wanted to just cover with this particular bar we had yesterday on Monday. It's called a frilled dragon bar. On stocks, it acts a certain way. What it is, basically, it's a big wide ranging doji. On stocks, generally the close of the bar is between a 30 and 70% of the bar. It's a very wide trading range bar, and generally how it works is that when you get a frilled dragon set up, whatever side of the bar that it comes out of on a close is the direction that you're going to take on the trade. Now sometimes it will head fake down through the lows of that just to test a little bit lower and then reverse back up. That happens less often than just breaking out of whatever side it's going to continue, either continue down or head back up. So what I'll be doing the next couple of days, I'll be watching the cycles off the highs there. So right now we have a TD1. Let's say we have a soft landing pullback inside of that tomorrow. You have a 1.5 day cycle inside of that. So I'll be looking how that price action unfolds. You know, originally I put a video out Sunday night where I thought we're going to get potentially 3 harsh weeks down. With this first week being a inside bar, retest of maybe 2/3 of the weekly down. So this right here was the close last week. If you look at the weekly chart, let's just go to weekly chart here. So you can see it's a very harsh bar right here. So I thought maybe it would stay entirely inside of that Monday through Friday of this week and head back up to 2/3 of that. Hadn't happened. It just fell down through that. Again, coming out of a weekend with real strong negative news on the tariffs, that's easy to see why that low got violated. But right now, since we have a dragon bar, we're going to kind of use that as a guide. So next several days, I'm going to be watching for the price action inside of that bar. Let's say we get a day or two inside of that, maybe even 3 days. I'm going to be looking for a breakout of that 2 or 3 day high. To take it long would be the way to go. And, if for some reason it flames out with more bad news, then just get out of the trade. But it's not a great time to be trading, be honest with you, stocks, etc. Now, if you're on the lower time frames on indexes, trading indexes inside of the intraday channels, half hour, 1 hour, 1.5 hours, etc., you're generally a lot safer. Even with 0 day expiration options, if you get tight entry. The volatility has been extreme, but again, if you're using the right indicators, etc., you're getting heck of a movement. Your risk reward is pretty darn good, considering the fact that the option premium is crazy right now, just because of the big moves. I've seen 700% moves at the end of the day on the options, SPY 0 day to expiration options, just because there's such big movement. So we'll be keeping a close eye. Let me cover a few more points here. So here's a breakdown of the frilled dragon. That's on our lingo page. You can look at that closer if you want. This is basically when you have this happen on a stock, especially after a downtrend. One of the biggest frilled dragon trades I've ever seen was on a stock called DTG, Dollar Thrifty Group, I believe. That was back, it was probably a decade ago. That formed a frilled dragon, I guess, coming off of they had gone into Chapter 11 bankruptcy. And I believe that was down all the way at 70 cents or something like that. It was either 70 cents or $1.50 on that. And that stock, I believe, went up to 75, 80 bucks over the next year off of that frilled dragon at the bottom. So when you have extreme price action at extreme areas of a chart, this is where you can get big moves. That's why I'm watching this dragon bar on the index closely. If this bar bottoms it out, it could be an extreme reaction off that lows, and it could be a big move up towards the prior pivot highs around 45,000 Dow Jones 30 over the next several months. Right now, because of the technical damage, I'm seeing the cycles going out to maybe 5 to 7 months, which would take us into potentially next year, early next year, before we get a breakout of the prior high. So that's a lot of technical damage. It generally takes some time to work its way out, so we'll be watching it again. I expect several months down in here, and drawing the trend lines out again. I expect it year end before we'd even have a chance to get out of that, and with potential for it being a lot longer. These cycles could go on for years if in fact there continues to be a lot of problems on the tariff front. So we'll see. But just be aware, this is a big key bar. It's called a dragon bar. And let me just one more time reiterate what I covered yesterday about the market rating. We're at an E- market. So that's just a good time to just stay in cash. If you're a seasoned day trader, it's fine to be in the market if you know what the hell you're doing. But this is the kind of market you can get burned very quickly trying to trade stocks over multiple days, swing trading stocks. Best to not hold overnight positions right now, unless maybe you're straddling the indexes or something like that. So again, overall market conditions not real conducive to trading long right now. So anyways, we'll be posting updates over the next several days. Take care. If you're interested in our trading style and want to join the club or get one-on-one coaching, head over to cycletradingtraining.com. Hope you enjoyed the video. Take care.